David, you know, there's been a lot of hand-wringing over the weekend about what's the threshold for pain for equities. When does it change? Rotation into wholesale selling. B of A this morning on Squawk talking about 175. But if Tepper's right and that rates have made most of their move for now, it does have big implications for growth.
It does. And listen, he keeps it pretty simple, Tepper, and he has also the advantage of having been right many times. So we listen closely when he speaks, as you well know. Carl. And so we're doing that this morning, and the market's perhaps also paying a bit of attention after what has been a tumultuous last few weeks, of course, in particular for those growth names that we've been talking about, many of them down as much as 20% or so. But he's saying in talking to Joe, you know, combination of stimulus and low Japanese bond yields, for example, positive for stocks. And to your point, Morgan, he thinks that the selling of Treasuries may be over. Hence, the yields may have hit at least a high for now.
Yeah, which is, of course, the great debate. Have we sort of hit that, you know, given the velocity of the move we have seen in something like the 10-year Treasury yield, you know, have we hit that level, you know, that sort of key level of trading, of selling for now? Or is this moving up to 2%, especially with the stimulus package now poised to be passed in the House and signed into law? That does seem to be the debate. Also just worth noting, looking at that futures board, is the NASDAQ is still the major average that is under pressure, poised to open today a bit lower. I mean, this has been a great rotation that is underway. CFRA had a good note sort of putting it all into perspective this morning, that the 10-year note yielded 0.93% on December 31st. It soared to 1.54% as of March 4th. Since posting its last all-time high on February 12th, the S&P has fallen 2.4%. And if you dig down and look across the different sectors, it's consumer discretionary and tech sectors, which were the big winners last year in the midst of the pandemic, rose 32 and 42% respectively, have fallen the most since that S&P February 12th peak. And it has been some of those weaker names in 2020 that have been some of the strongest or most resilient in the last couple of weeks as well, Carl.
Yep. It's going to be a great day, guys, to talk to Kathy Wood, of course, later on this afternoon on Closing Bell, get her sense as to how this rotation is working its way out. That's going to be a big one, and obviously responding, perhaps agreeing with what Tepper is saying. David, you know, over the weekend, Morgan Stanley, for example, Mike Wilson, I think everybody is sort of where Cramer has been for the last couple of weeks, and I wish Jim were here, but the general point being, economy is going to be on fire. Q2 growth is going to be huge. I think Goldman's at 11. By the way, Goldman year-end unemployment forecast now down to 4.1. So the table set for a good year, but the rotation is so big and the portfolios are so out of position on these new cyclical names that Wilson says, you know, the NDX goes back to its 200-day year-end target, 3,900. So it's a big boat to turn.
It is, and it's one that we will continue to watch closely, and it's a story that, of course, is going to, well, play out over these next coming months. The growth targets, as you say, are quite significant, at least at many firms, in terms of what they see GDP at. With the $1.9 trillion, we're on the precipice now. Of course, the House is going to be, and we'll get an update from Elon shortly on where things stand. But very likely, as the president indicated, that checks are going to go out in the next few weeks, I guess. And we are all going back, or at least the expectation is that there is a return to normalcy occurring at a more rapid pace now. Morgan, given the prevalence of vaccines, we're hitting some new numbers in terms of how many people are getting vaccinated every day. And so take those together, and we come back to this question of, will we have inflation? Will yields actually go higher, even though Mr. Tepper says perhaps we've hit a recent high? And what will it mean for these continued growth names that we follow so closely that have, of course, been the engine behind so much of the gains that we've seen over the last year or so, or let's at least call it since April of last year?
Shepard Smith here. Thanks for watching CNBC on YouTube.